hone in
Hey,
our coding.
Dusty, are
Yes.
you? Oh,
I
perfect.
started it.
Okay. Okay, perfect. Great. I
Thanks,
just wanted
Kristen.
to pause to start a recording, but Katie
Yep,
did it,
thanks,
so
Kristen.
perfect.
Oh, perfect. Okay. So these trainings are really designed to bring us all together, align our accounting practices, get some consistency across the portfolio, and really hopefully ultimately change the narrative. I know we keep hammering on this, but the narrative around charter schools not um, servicing the same population of students. And you all obviously in your schools, you know what the hard work that you guys are doing, the populations you're serving. And so we really want to make sure that our finances reflect the work that you guys are doing. And that's really what these trainings are all about. So last time we talked about budgets, filling out that budget form, budgeting best practices. Some of this will overlap with that, obviously, because we're talking about accounting and coding and those sorts of things. This is a little more focused on closing out FY25. And why we really wanted to do this training was first and foremost because of what we did find on after reviewing all the 387 reports and the FY26 budgets, but also because the SBCSA did not review your FY25 budgets at any time last year. So more than likely, given what we found, especially in the 387 report, there's corrections that are going to need to be made for a lot of you. And so we want to get on top of that and get out in front of it. Your audits are coming up. And then right on the heels of that will be the 387, along with amended final budgets, most likely, especially given these AB 398 raised dollars. So as much as we can clean this up now and get everybody on the same page, the better it will be when we get time to doing these reports and not have such chaos like we did last year. I know many of you, I worked with you quite a bit trying to correct 387 reports. And it was just chaotic. And we really want to head that off. And so that's really what these trainings are about. So with that, I'm going to jump in here. Again, this is a slide many of you saw last time. And this is really just to demonstrate the impact, to give one example of really where charter schools are fueling the narrative around the population of students that we're serving. And that narrative meaning we're underserving the special education population. We're not serving the same severity of IEPs, et cetera. This is what the local SPED funding looks like going into this next biennium. And as you can see, charters are serving, are only getting, let's see, we are serving about, the district rate of IEPs is about 15%, charters are 11, so we're a little lower. However, districts are getting over 96% of the local SPED dollars and charters only 3.8%. I would expect those numbers to be a lot closer to reflect the actual IEP counts. And this is all a reflection of how we're doing our accounting. And again, so that's just one example. There are other areas, but this is the most impactful area. And if you look at that on a per IEP basis, the statewide average is about 8,700. Districts are getting on average about 9,500 per IEP back in local SPED dollars, and charters 2,800. So clearly that is incorrect. We know that, but this is due to accounting practices and how we are coding everything and how it gets reported on the 387 report. So this is probably the most impactful examples. There's lots of other smaller examples, especially when we get down to the school level. But this is just to demonstrate how important this really is to making sure that we are coding and understanding the ramifications of that coding. So let's jump in quickly. NAC and NRS requires things like annual audits and the completion and submission of the 387 report. So NAC 387 discusses really local governments and charter schools specifically that we have to get an annual audit conducted. You all know that. You all get your audits done. This is just one of those areas in legislation that points to that. The 388A report, now it's commonly referred to as the 387 report, but technically NRS 387 governs districts and does not include charters in that legislation or that particular NRS. So charters are really governed under the 388A NRS. And so that's really what our report is, even though it's basically the same as the districts. So you'll start hearing that more referred to as the 388A report rather than the 387, but we're talking about the same things. And that's the big annual financial report that we do every year. This is what governs that, and that's the NRS chapter. Now, this still says November 1st, and we're all used to, especially for you schools that have been around a while, November 1st was the deadline for that to be submitted to NDE. That date was changed by the legislature in this last session. It's more than likely going to be due in January this year, probably the first full week in January. However, more information will be coming out about that. It is our goal, if we can coordinate with NDE, to get our schools a review period. So, for example, if the report's due to NDE the first Friday or the second Friday in January, our goal is to collect all these reports from you schools sometime probably in the beginning or first half of December. It'll give us an opportunity to review them, give you guys feedback, correct them, so we don't have this mad dash after, like we did last year, after they go to NDE and we're turning around, firing stuff back, giving 1, 2, 3 more deadlines. We need this turned around in a hurry. Our hope is to clean all that up. So you are going to get more time to complete the 387 report. We just don't have all those dates finalized yet. Katie, do you want to add anything to that, or is that correct?
Yeah, no, that's exactly correct. The NRS was changed in a bill sponsored by the Nevada Department of Ed, I think primarily so that schools and districts could use audited financial statements. But we are hopeful that we'll be able to sort of, as Dusty said, do some review on our end. You all may remember last year that we didn't get the template for this report until about 4 days before it was due. So we're going to try and work with NDE a little bit more proactively to see if we can get that early and try and, by the time we submit our stuff in January, we'll have already reviewed and finalized it. So that's our hope this year. Also understanding, December, some of us have a couple things going on. So we're going to do our best. We can make no promises, but we're going to be out there fighting the good fight.
Now, the financial audits will still be due at the same time. So your financial audits due to your school leaders, whether your principal is your ultimate school leader or you have an executive director or something, those audits are still due to your executive director by, I always thought it was the last day of October 31st. And then your board still has to approve those audits by the end of November. So that timeline hasn't changed. So you will have your audited financial statements. You should have your audited financial statements completed by the end of October. So there will be time, rather than a mad dash the last week in October trying to wrap up your audit and your 388 report. You'll have time to complete that, even if we are able to require that and get you the template early enough to where you have time to complete it and get it back to the SBCSA, again, maybe sometime in the first half of December. So we're working all that out. More information to come on that. Okay. So one of the big things we're finding and looking ahead to the audit, the 387 report or 388 report, looking back at these budgets, is accounting methodology. In your financial audits, you really get 2 sets of financial statements. One is what we call the government-wide financial statements. And this is key because this is one of the big problems we're seeing when it comes to the 387 report and your budgets, are these 2 different methodologies. This is verbiage taken right out of an audit. So this is auditor verbiage about the 2 different types of financial statements. It's similar across auditors. Almost every auditor I saw had a similar write-up in their audits about the difference between the 2 financial statements. If you've never read that in your audit, I really encourage you, back office providers, accountants, school leaders. It's really important, even if you're not an accountant, to kind of understand the difference. So here's what we're seeing. In these government-wide financial statements, your school, let me back up. Everything we do when it comes to creating budgets and reporting in public schools, school districts as well, is based on a fund basis. We budget on a fund basis, we report on a fund basis, but when it comes audit time, the auditors, in compliance with GASB and accounting practices, they will create a set of financials called the government-wide that it's really converts your fund financials into something similar to a private business, where you take into account things like depreciation, liabilities, assets are pushed out. They're not counted as an expenditure other than depreciation. We have to deal with the PERS liabilities, the net pension liabilities, things like lease liabilities now that are accounted as a liability and an asset. So all those different accounting requirements that convert your financials into something that looks more like a private business, those are what we call the government-wide financial statements. The fund financial statements have to do with all your fiscal funds, your general fund, your special education fund, the other funds that you're operating. We'll get into those in a minute. And it's really a collection of all your resources and how you're using those. It's really sources and uses of funds. So where the dollars are coming from and how you're using them. It doesn't matter if you're making a capital purchase or you're paying PERS on your employees, whatever. It's really how you use the dollars and how they match up against the source of those dollars. Was it a federal grant? Was it PCFP base funding? Was it ELL funding, et cetera? And so those fund financial statements are important to make sure that you start looking at those, because that is what should match coming out of your audit. Those numbers should really match what your reporting on your budget as your prior year budget, as well as on your 387 report. And so when we start looking at irregularities that we're seeing, the first thing is really that methodology. What we're seeing is schools using their net positions, their government-wide financials, as the starting or ending points for their beginning budgets or their actuals in the 387 report. And for a large number of schools, probably the majority of you, your net position, because of the PERS liabilities that's put on you, now the lease liabilities that we have to accrue, a lot of your net positions are negative. Net position is not your fund balance. Your fund balance is really everything that's left over after you've written all your checks. That's different. And we need to be using fund balances on your 387 report and on your budget. So if for example, your FY24 ending fund balance, combined ending fund balance in your audit should become your beginning fund or opening fund balance for your FY25 387 report, 388 report. So when you complete that, and in your revenue section, it says, identify all your revenues, federal revenues, state revenues, et cetera. One of the last line items is, what was your opening fund balance? That should match your audited ending fund balance from the prior year. It should not be your net position number out of your government-wide financial statements. And honestly, in my point of view, the government-wide financial statements shouldn't be reported anywhere other than in your audit and when you show your audit to your board, because there's not operationally for schools, as you're collecting revenues and writing checks for things for educational purposes or capital purchases, there's not a lot of function in there for those that accounting method. And so we need to get rid of those numbers when it comes to state reporting. And that's one of the biggest things we're seeing. We're also seeing a little bit in not just the opening and ending fund balances, but in revenues and expenditures, where when we're reporting prior year revenues and expenditures on the 387, we're trying to use the government-wide, and those are called the statement of activities, which is really kind of like a profit and loss statement in your audits. Those do not match your fund financials either, because they have things like depreciation expense in them that aren't reported. And so we don't want to be using those. We should tie out to those fund financials. And usually in most of your audits, it's called the statement of revenues, expenditures, and changes in fund balance, governmental funds. There's a page in there, and that's where all your revenue is recorded, all of your expenditures, everything you've written checks for, whatever payroll periods you've accrued back, so on and so forth, and it comes to an ending fund balance. So that's really what we should be using when it comes to these reports. Now, some other things we've seen, and some of this is a little bit of a repeat from our last training. This has really gotten cleaned up in the budget, so I'm really hopeful when it comes 387 time that a lot of this is already cleaned up. But reporting a use of funds or lack thereof not authorized by the board. So last year in the 388 report, we saw things like enterprise funds being used, debt service funds. These are things that districts use that are getting designated tax dollars to service bond debt, that are using enterprise funds because they're operating things for profit. For example, an enterprise fund, a district, I believe our local district in Churchill County used enterprise funds for things like their construction classes built and sold homes. You know, they set those sort of activities aside where the intent is to make a profit, which is really not what we're in business for, but schools do run some things. So if your board decides to open up a total separate fiscal fund because there's significant enough dollars to track separately, you would have an enterprise fund. It looks like we pretty much got all of those out of your FY26 budgets, but that doesn't mean you didn't have them listed in your FY25 budgets. And again, these funds have to be authorized by your board. So for you to operate a separate fiscal fund, whether it's at risk, ELL, special education, and I'll go through some more of them here in a minute. Those have to be authorized by your board. So last year we saw things that we knew schools probably weren't actually operating. They were just coding them in the wrong spot. So we want to be careful of that. And then some of the big things we're going to get through, the biggest is not allocating all costs associated with your other funds that you should be operating. We also saw schools that weren't coding costs to things like ELL and at risk, even though they were getting revenue. And I'm going to skip to this page real quick. These are the funds that charter schools, most of you should be operating within these funds. Everyone will have a 100 general fund. That's where your general, probably 90% of your dollars go into your general fund. That's your PCFP base. Actually, your local SPED dollars, not your state SPED, but your local SPED dollars are part of general fund. You know, fees that miscellaneous fees you collect from families, revenues you collect from fundraisers or from events. You know, if you have sporting events, things like that, all of those sorts of revenues, interest on bank accounts, et cetera, go in your general fund. Now, if you are getting PCFP ELL dollars, you have to operate an ELL fund. If you're getting gate dollars, you have to your board has to authorize a fund 207. At-risk dollars, the same things. Everything I've starred here per legislation, you have to operate a separate fund for. Special education, if you're getting state SPED dollars, your quarterly SPED payments, you have to operate Fund 250, state special education. So we should see dollars reported on your 388 report and in your budgets for those funds if you are getting revenue. Now, at risk is one where you might not have any kids qualify for at risk, and because of the new Infinite Campus model of identifying students at risk. But you might have costs associated with, because maybe last year you got money and this year now you don't. So you could be operating Fund 208. I could see you operating that with expenses without any revenue. But generally speaking, you know, if you have ELL students, you're going to get ELL revenue. If you have IEPs, unless it's your very first year of operation, you're probably getting dollars and you should be tracking those in there. Now, aside from that, if you're a school that gets significant federal dollars, it's probably a good idea that your board authorizes a separate fiscal fund for federal dollars. A lot of districts do, but some charter schools like us at Oasis Academy, we did not get significant federal dollars. We got a little bit of Title II money and a little bit of Part B special education money. That was it. They weren't significant compared to our overall revenue, so we didn't actually operate a separate fiscal fund. We tracked them via project grant codes, that are spelled out in the chart of accounts. So it's not like we didn't track the revenue and the expenditures. We just didn't open a separate fiscal fund. And remember, a fund is like a whole separate chart of accounts that you have to keep track of. It's a whole separate fiscal entity, almost like a separate business that you have to track, and your auditor has to audit. And so it's my opinion that if you aren't getting significant federal dollars or significant state grants, you know, our auditor always told us that we didn't need to open separate funds to track minor amounts of dollars other than ELL, gate, at risk, because those are mandated to be open. So that's a little bit subjective. If you're bored and you decide it's best to open a separate fiscal funds, by all means, go for it. Lastly, you'll see we do have the new fund 220, that we'll be using going into FY26 for the AB 398 raises. And I apologize, it still says SB 231 from 2023. It's going to be in the same fund. They're going to keep that fund number, but this will not affect your FY25 because obviously we didn't have those dollars. So you won't have that fund to report on for FY25 in your audit and in your 387 report. So I'm going to back up a page real quick to finish these points, and then we'll jump into the year-end closeout stuff. Another thing we're seeing, so that kind of covers the funds, what you should and should not be operating in, or what you may or may not be operating in when it comes to fiscal funds. Another thing we saw, and this actually came up during budgeting, is schools treating weighted fund dollars. When we say weighted fund, we mean things like ELL, at-risk, gate, and then separately special education. Treating those as grants where you think that you cannot cost more out to those funds than the revenue you're getting. It just came up the other day with a school who asked about that. These are not grants. These are appropriations. They're revenue streams. And we all know we're underfunded in Nevada, especially in those weighted areas. You are most likely, undoubtedly, going to spend more in special education than you're getting. We're severely underfunded. So it's okay to cost out more to your Fund 250 than you're getting in state revenue, because you have IEPs that you have to service. And if you have some one-on-ones that are severely impacted, that cost you, you know, an entire staff member, which could cost you tens of thousands of dollars, things like that. It is what it is when it comes to servicing your IEPs. So please make sure, and we've hammered this home, especially in the budgeting process, that you are capturing all those costs. We saw this in the 387 in the budget, where a school might have $50,000 in state fed revenue, and they're only reporting $50,000 in costs. There's no way that that's probably accurate. 99 out of 100 cases, I'm going to go ahead and say that that's not accurate. In general, what we're seeing from districts to schools is you're probably going to be spending 2 to 3 times the amounts on special education as you're getting back in state dollars. Now, if you're a really small school and those IEP numbers get lower, that could fluctuate greatly, right? Because if you only have 10 IEPs, but 5 of them are severely impacted, you might spend 5 times or 6 or 7 times the amount of state revenue you're getting. Or if you are a larger school, you got a couple thousand kids in your school and you're servicing 200 or 300 IEPs, and you don't have a lot of severely impacted students, you know, and you're just pulling students out of your general population for various needs, that cost might be lower. Maybe you're only down around 2 times as much. But in general, you're funded on your prior year's October 1 IEP count. So unless there's a really an odd case, or maybe you're a small school and you had a bunch of IEPs unenroll or they moved on, and so your number of IEPs dropped drastically, we probably should not see your costs roughly equal to your state sped dollars, because that probably doesn't accurately reflect how your school is operating. So that's one of the biggest things we've seen, not only in sped, but ELL, at risk, is making sure you're costing out everything. Now, what does that lead to when you're spending more in one of those funds than you're getting in revenue? Obviously, that is a deficit, and we call that deficit spending. And so everybody's doing it in special education for the reasons I just explained, but you have to balance that out at the end of the year. Okay. So before you go into the audit, how we do that is we go to our general fund and we transfer money over from the general fund to special education. So if you got $50,000 in state sped money and you spent 150 throughout the year, well, you probably have a $100,000 deficit, and you're going to need to do a transfer of $100,000 from your general fund over to your special education fund to zero that fund out, to catch it up. No different than if you were operating, 5 or 6 private businesses under one umbrella and 4 of them were losing money and 1 was making money. You're going to use the profit from the 1 to supplement the other 4. That's a similar concept to how that works. And so we got to make sure we get those fund transfers done. Your auditor will want to see that, make sure those fund transfers are done appropriately. So that's what we get to at the end of making sure our costs. The other thing we've seen, this doesn't so much affect your year end, although we will get it. We will talk here in a minute about what to do if this changes your authorization, is amended budgets to account for changes throughout the year. And so I think what all of this is pointing to, as we've talked to many of you now in the network of charter schools, is we're really trying to understand the relationship between school leaders and back office providers or EMOs or whoever's doing your financing. And what we're seeing is an increased need for coordination between the two to make sure that the accounting team can accurately track changes throughout the year. Melissa and I worked together for years in Oasis Academy. There was very rarely a day that she didn't come into my office or I didn't go into her office and discuss a change, a staff moving, purchasing of supplies, where it should really be allocated, looking backwards, things like that. There's so much coordination that needs to happen. And it appears to us anyways, after talking to you guys, that we need to do a better job of increasing that coordination between back office providers to make sure, because if information isn't changing hands, there's no way we're ever going to code these expenditures correctly. Real quick, budget authority.
Dusty, do you want me to talk about, is this where you want me to talk about kind of the top kind of 3 areas where we saw those changes that needed to be communicated?
Let me get to, I think, 1 or 2 more slides, and then absolutely. Thank you, Melissa. Okay, so if you aren't familiar with budget authorization, please review this NAC because it really identifies what you can do as a school leader versus what you have to take to your board. This is important because, again, we didn't review last year's budgets. And so looking at the 387 reports, if you know that you aren't recording costs correctly, let's just say in special education, you way under budgeted because you didn't think you could budget more than what you were getting, for example, and you know that you're going to have to move or recode, an extra 100% or 200% to that fund, you are more than likely going to need board authorization to do that. You as a school leader cannot move expenses from one fund to another. Only the board can do that, and the board has to do that in a public meeting to move funds from one fund to another. So to appropriate, if you were only budgeted 50,000 in sped and you really spent 100, then and you need to code that correctly. That's spending above your budget amount. Only your board can really authorize that movement over. You as a school leader can move dollars within a function code, and you can do it with minimal reporting within a program code. But when it comes to moving money from one fund to another, you're stuck going to your board with that. So we want to make sure that you understand and it's probably for those of you, especially those of you who are new to charter schools or new as back office providers, a lot of you we went through a process a couple years ago, NDE did, about reviewing financial policies and I think like fraud protections and internal controls and things like that. A lot of you probably have language in your financial policies about something like this. So this might be a good time to kind of review some of that. Okay, so let's talk real quick about year-end closeout. Now, I know a lot of you are going to have your own internal processes and stuff. So don't take the 1, 2, 3, 4, 5 as a specific order of operations. For me personally, this is kind of how we did things. But again, as long as you're making sure you're doing at least this stuff, you'll probably be in good shape. And for most schools, all of your audits were pretty clean, et cetera. But that doesn't mean just because you have a clean audit that things are accounted for correctly, okay? Because you present your financials to the auditor takes out for what it's worth, and they do their testing based on what you give them. If you give them stuff that's not coded correctly, they don't know any better. They're just going to do their testing based on how you coded it and gave it to them. They're not going to catch, did you code Sally properly to special education instead of general education? They're not going to test for things like that. It's up to you to make sure that your stuff is coded correctly. Okay. One of the first things, if you are not doing that, I imagine most of you are, so I apologize if you're already doing some of these things, which you probably undoubtedly are, but please make sure you're reconciling your PCFP payments at the end of the year if you're not already doing it as you go along. And that's a process where you should be checking, because every quarter NDE will true up your payments throughout the year. So at the end of quarter one, going into your November 1st payments, you know, your first quarter's ADE is based on your last year's ADE. You don't get trued up until quarter two, because your October ADE report that you submit, that's what gives NDE the updated enrollment information to true up your quarter one. They'll also true it up if you had kids unenroll and your Q2 ADE report shows a drop in enrollment. They will true that up for quarter two, going into quarter three, et cetera. It's really important that you look at that in total, go back to your ADE reports, and make sure that you match. NDE almost every year sends out a true up workbook, usually about this time, somewhere end of July, first part of August. And a lot of schools will owe money back. Some schools will be getting money back. Those are all according to NDE's calculations. Please make sure that you double check those against your own ADE reports that you filed. In there is also your ELL and at-risk money. And so make sure that you match or come close to matching. I always had a hard time balancing down to the penny because there's so many different round formulas in those spreadsheets that they round, different ones round. And so you might be off a little bit, and you know, a lot of times I would be off like $100 or $70 or whatever. So that's insignificant, and I'm not going to try to track down, spend hours trying to track down $100 or $200, but that's totally up to you. But again, please make sure if you're not doing that, is you're reconciling against that. We caught errors in the past in multiple years. Some years it was our own error. Other years it was on NDE's end, and we were owed money that didn't show up in those true up workbooks. So that's really on you to make sure that you verify what NDE is telling you. Okay, obviously, this goes without saying, you're all going to have all your bank reconciliations, your grant reconciliations, any credit cards, all your various accounts that have to be reconciled every month. That all has to be done. Accruing your payroll, most of you probably have a payroll that's date that's past June 30th for your final payrolls for the prior year. I know our last payroll was August 15th because we were on an August 1st contract start for our teachers. So it was August 1st to, you know, July 31st, and you got paid on the 15th of the following month. So like for us, our last payroll was August 15th. So we generally had 2 payrolls we had to accrue back and do a journal entry back to June 30th. You're all already doing that. I just want to, I put it in there, recognize that's part of the process. Okay. And you're also going to accrue any receivables. A lot of you will have grants outstanding, PCFP true ups, et cetera, making sure those are all done and cleaned up. The biggest part we want to talk about, though, is reviewing your budget to actuals. And this is a part, especially for FY25, that we feel you guys ought to take the opportunity, school leaders and the accounting teams, to really sit down and look at your budget to actuals. Number one, see where you might be off. And number two, see where you may be coding people incorrectly. If your budget to actuals are showing that your state sped revenue and your special education costs are almost equal, that probably doesn't make sense. So this is your time to sit down, look at those budget to actuals, and start looking for things. For me as a CFO, I went through my budget to actuals and I was looking for large deficits or large surpluses in line items that that didn't match up. And then I'd have our accounting team pull details and start looking at things. Things that I found, I would find things like supplies coded to the wrong line items, purchase services. I would find staff members who were coded to the wrong department. So my wages might be higher, for example, higher in special education than I had budgeted, or higher in ELL. I'd go back and look, oh, we accidentally coded an IA to the wrong spot. Melissa, as a school leader, probably has multiple examples. Melissa, do you have a couple examples?
Yeah, I think some of the like common ones Dusty's already talked about is employees that like partway through the year, right? Like they were, and it could go either direction, right? They were hired as a special ed one-on-one aide, and then that student moved. And so you just transferred them over to general ed and they were no longer working in special ed, or vice versa, right? They started out as a general ed IA, and then something happened in sped, and you needed them to go support a student with special needs. So that's a big one. The other two big ones that I think are really easy to miss that we like caught ourselves on were when you're buying new curriculum. If you buy almost every curriculum has supplements that are designed specifically for English language learners or students on IEPs. You should allocate those resources. Now that doesn't mean the whole curriculum, but if you buy that, that component that is for that purpose, that was one that we missed. And another one that we always had to like double check ourselves on was our technology, right? We would do like an annual Chromebook reorder. We'd order a couple hundred Chromebooks every year just to keep our rotation fresh. And inevitably there was some sort of IT needs that we were buying for a student on an IEP, whether it was an iPad, whether it was just some other piece of technology that was specific for either our special education department or a specific student. And we would have to go back and recode those. And then the last one that comes to mind is there were certain programs, like software programs, can't remember what they were called, but there was one that we had for years that would like read books to kids. Anyway, that one, we had to go back and like, we didn't code it right. And we had to, do this, ledger and true it up and make sure we got it coded to special ed. So those were there can be one-offs, but those are the ones that like consistently we found, that we had coding issues on.
Thank you, Melissa. Benefits was another one that we would find a lot where, a staff member did move or maybe moved part-time from general education and started splitting their time with special education. In scenarios like that, making sure we had the benefits tracking with the employees. So sometimes I would find that salaries moved correctly, but we didn't split health insurance, or we didn't allocate PERS correctly to the right spot. And so finding those things, to some of Melissa's examples, I would never know that as a CFO. I wouldn't know that this software was really for special education versus ELL versus general education, or which technology items. But where I would catch it again is my budget to actuals, and I would see stuff that looks like we're spending above our budgeted amount or outside of our authorization amount. If we spent too much in a fund like special education, above the budgeted amount, which again, you're not authorized to do, to spend in excess either, we would go back, look through the details, and be, oh, that's because this needs to get reallocated to general education or reallocated to undistributed programs, meaning it was like a front office purchase or something like that. There's a million examples we could give, but it's really hard to flesh those out if you guys aren't communicating between school leaders and your accounting teams. And so that's really important. It's a detailed process. We feel that now that we're starting to get on the same page with budgets going forward, that's probably going to be easier for you guys. But you all have different payroll systems. A lot of you outsource payroll. It can be difficult to split people, split benefits. I can appreciate all of that. And so especially this last year, again, there's probably going to be a lot of cleanup as you start going through this process. You know, when we had a lot of cleanup to do, we would just do it via journal entries. We wouldn't try to go back and fix payroll periods. You know, if we found a mistake that we didn't code, you know, a specific IA, we didn't move them over in January when they moved from general education to special education, we wouldn't try to go back to those payroll periods and fix them. We would figure out the portion of salary and benefits that needed to be allocated correctly, and we would do it in a journal entry, which means you do it in one correction. We would have batches of journal entries to correct things. Sometimes with grants are like that, right? You're going through the year with a grant expended, you know, you got various expenditures, and at the end of the year when you reconcile it, you realize you need to recode something to a grant, so you do it in a journal entry. A lot of times for your accounting teams, that's much easier than trying to go back and unwind things that happened months ago. Sometimes if it was a complicated, if there was a person who might be working in 3 different areas, ELL, at risk, and general education or something like that, or ELL, special education, and general fund, we wouldn't even attempt to split those out throughout the year in payroll. We would do it at the end of the year in a journal entry, or sometimes maybe at month end, do a journal entry every month, simply because our payroll, the payroll system, it was too difficult to try to split it out in payroll. So you can get creative in how you do it as long as you get to the correct endpoint, which this is really all about. So once you've gone through that process and really started diving into those things, then it's time to really start looking at your opening fund balance, with making sure that matches your prior year audits, looking at your ending fund balance, and drafting those fund transfers needed to go from your general fund over to those other funds. And Melissa, I see you got something. Go ahead.
Yeah, I just have a question, Dusty. So if is these journal entries, is this also where if there's a school out there and let's say for whatever reason they hadn't created these funds, right? Or they hadn't, like, this is where they could also do that, right?
Absolutely. And again, I know everybody has different accounting systems and stuff, but in your NDE chart of accounts, if you know, you're like, oh yeah, we don't even have a code for an ELL fund, but we had ELL expenses. This is where you, in your accounting system, you would want to create that fund. Now, if that happens, or if you spent way more than you budgeted, because really ultimately you didn't budget correctly because you didn't think you could spend more than you got in ELL revenue, or spend more, something like that, or maybe you were just like, oh my gosh, we didn't even operate, our board didn't even authorize the use of this fund and we're using it. Melissa and I talked about this. We think the best practice would be to clean all that up and take an amended cleanup budget back to your boards and let your board authorize that, because otherwise it could be a finding in your audit. If you show the use of funds that weren't opened by a board, or spending more dollars than you budgeted, your auditor compares your actuals at the end of the year to your opening budget and your ending budget, which your opening budget is always your June 8th budget, not your tentative budget. Your tentative budget in April doesn't matter. As far as the audit's concerned, your final budget that's due on June 8th of the prior year is your opening budget, and then your latest amended budget that your board has approved like for us at Oasis Academy, there would be years where we had 2 to 3 amended budgets throughout the year because of various changes that we needed to move money from one fund to another, or maybe we got awarded a grant halfway through the year and we needed to authorize that, et cetera. Our latest amended budget is the one the auditor would compare to our actuals to see if we spent outside of authorization limits. This is where I think if you have significant changes, you should clean it up, present it to your board, and just let them authorize it all at once. Authorize the opening of the ELL fund that you didn't really have authorized before and weren't using, or whatever it might be. It won't hurt anything. And that way you have those funds authorized going into your next year, and it just cleans it up. It's being transparent with your board, which is never a bad thing. And so I would consider that. Now, if you got questions on this later, by all means, reach out. We can do any one-on-one follow-ups if you want more information on maybe what that process might look like. Melissa and I can absolutely help you kind of walk through that. But that might be something for this year that you need to do because, again, we didn't get a chance to work with you guys on your budgets from last year and making sure you had the proper funds, et cetera, et cetera. So think about that, and that might be an option for you. Okay, and then after that, obviously, there's lots of other schedules you have to complete for your auditor, your capital asset schedules, looking at your GASB adjustments for lease accruals and liabilities, getting all your board meeting minutes together, all those sorts of things for your auditor that kind of rounds out your year-end process, plus anything else you're already doing. You're all good at a lot of that stuff, so I don't want to dive into that. But I recognize that there's a lot of work to do to close out the end of the year and lots of stuff to get done, lots of backup documentation and things. But those are really the biggest things, some of the biggest things that we see that could really help clean us up going into audit, going into the 388 report, and having accurate dollars in there so we can start reporting, backing up what we see in enrollment, backing it up with actual financial dollars that we know are being spent in those various programs. So I just have a few more slides and then I'll absolutely open it up for questions. So please write down those questions and then I can back up from there. Okay, this is a repeat from last training, but again, I mentioned this, understanding the difference between grants and appropriations. Again, the weighted funding are appropriations from the legislature. They're not grants that you have to match up, tie out to. They're not reimbursement based. They're appropriations. You're undoubtedly going to spend more in those programs than you're getting, and that's fine. They're separate funds. You'll do your transfers. Whereas grants, obviously, especially a lot of them that are reimbursed, they're very narrow in scope. You have a narrative around what you're going to spend the dollars, and you match those up exactly to collect all your money. There's a process at the end to close it all out. And maybe you're billing it monthly, maybe you're billing it quarterly or one shot, whatever. But there is a difference. And the reason we bring this up again is because it appears there's some misunderstanding in how we treat funding appropriations versus grants. And so we just really want to kind of make sure that both school leaders and accounting teams are on the same page with those, and making sure that we're reporting and treating those dollars as they are intended. Okay, so last couple of slides, common expenditures. This is in here. I showed this last time. These are really by the NDE account codes. So the top here are the examples of funds that your board may have authorized you. And then the program function and object codes that are commonly used in each of those funds. Obviously, in the general fund, just about all your programs, functions, objects can be usable, other than programs specific to special education, ELL at risk, et cetera, et cetera. So this is just kind of a little cheat sheet guide that gives you an idea of some of those function codes that could be used within those funds, because again, each fund has its own chart of accounts that you have to kind of balance out at the end of the year. Minimum account code structures. We've had multiple questions on this depending on your accounting system. This is what we were able to get authorized through NDE as your minimum strings in your accounting system. So on the revenue side, you at minimum have to have your 3-digit fund code, your 3-digit project grant code, and your 4-digit revenue code at minimum. On the expenditure side, at minimum, you got to have your 3-digit fund, 3-digit project grant, 3-digit program, 4-digit function code, 3-digit object code. Now you could have more. You could also have the revenue code embedded in here. You could have your school level. Is it elementary school, middle school? K-8 has a code. High school has its own code. So if you are a K through 12 school or a charter network that has multiple campuses from an elementary to a middle school to a high school, then maybe you have a level code out here, or also a site code. You can have site codes for your different school campuses. So I know at Oasis Academy, we added 2 more elements to the end of this. We had a level code to divide up our expenses between K-8 and high school. So if we bought a batch of 100 Chromebooks and we know that 30% of them were get allocated to the high school and 70% to K-8, we could differentiate that by, even though that they were all for the same fund, project grant, program, function, object, they were for different sites. And so we would note that in the end code here. So anyways, so you could have expanded codes, but at minimum, this is generally what your chart of accounts at minimum should at least contain. Okay, so I will stop there. I know I said a lot. Let's open it up for questions, comments. Maybe some of you are doing some things a little differently that are awesome ideas. This is the time to do that.
Betsy, do you see the question in the chat?
I do. I see a question from Jill with the Keepo. Okay, the question is, do we need to submit an amended budget with fund changes to state as well, or just board approval? If you're talking about opening up a fiscal fund, there's not really a report other than your budget that shows what funds you're using to the state. I would make sure in your board meeting minutes that whether it's wrapped in with your budget approval or a separate line item, that your board specifically cites the authorization of the use of whatever fund it is you want to use. So if you weren't using, ELL before, which is Fund 206, that somewhere in the board minutes, it's captured that your board approved the opening and use of Fiscal Fund 206 ELL. So if that's part of the same agenda item as a budget, so be it. Because your board meeting minutes obviously ultimately get uploaded to Epicenter and go to your auditor.
But anytime the board does an amended budget, you should send it to us. There's not really a great way to upload it into Epicenter, but you can email it to us and we'll upload it on behalf of the school, and also email NDE and the LCB email addresses that your final budgets go to.
Melissa, any other thoughts that you have on year-end closeout that you can think of?
No, to reiterate what you said, I do think it's really important for the fiscal team to sit down with the school leader and sort of work together, spend a day, 2 half days. I mean, it's a cumbersome process, but it's the only way to be accurate.
Well, again, as you're going through this process, if you guys have any questions at all, Katie, myself, and Nate is who you would reach out to get some insights or anything like that. and we're happy to jump on a call or shoot an email out to answer any questions you have. Most of you are probably starting to meet with auditors come August, or at the latest first part of September. So again, we got a little bit of time.
Sorry, there is another question in the chat that I think is a good question. It says, you mentioned that the numbers entered into the 387 report should be based on the fund level accounting with matching beginning and ending fund balances from the audit. What if the school's accounting is done on the full accrual level, government-wide accounting for fixed assets on the balance sheet, depreciation, et cetera, on a monthly basis?
Then you would simply, or well, I shouldn't say simply, what I would do is I would dump them out, obviously those financials into Excel, and I would pull out those items that to adjust it back to a fund basis. So on a fund basis, for example, the purchase of a capital expenditure, which is defined as anything over $5,000 by NDE in the chart of accounts, that gets counted as a full expenditure. So you would take out the depreciation and add back in the full cost of any capital assets. You would remove any of those pension liability expenses that are related to that, all that actuarial stuff, if you're making those adjustments in your accounting system. A lot of you don't make those adjustments in your accounting system. And so, yeah, you would simply need to pull those out and make the adjustments, which your auditor actually does. If you look at your financial statements, there's a reconciliation between the two different financial statements, and they show you how they get to those numbers. And so you can see the process your auditor went through and essentially kind of copy that and go backwards to your fund statements. But you will need to convert them because that's the way the state reports are set up.
And Christy had a good comment, which I think is important, that now that this report is going to be due after audits are due, schools can tie to the fund statements in the audit as well.
Absolutely. It'll make things a lot easier, because I know that is for at least for accounting teams, in my experience, was the most hectic time of year was the last half of October, trying to wrap up the audit, do final adjustments, and do the 388 report. Was just a nightmare. But so that is good.
And from what we can tell, the report will be due January 9th, 2026.
To NDE.
To NDE.
Okay.
Hopefully, but this is another reason why you can't be late on your audit, friends. If you're late on your audit, then you can't get your 387 report done correctly. So just a little plug, like Dusty said, you should already be like meeting with them, ramping. You should have those meetings scheduled. You should be ramping up for that.
And we've already reached out to NDE and talked to them about our idea of trying to get that template, because there's always a revised template every year that comes out. And a lot of times there's multiple revisions that come out right before the due date. And our hope is to get all that done by, hopefully by close to the same time as the old due date, somewhere around November 1st. If we can have an accurate template to get to you guys, that you can start filling that out and you can send those to us to review by the first part of December, then we have plenty of time to give feedback, look at corrections if necessary. And when they're due to NDE on January 9th, as it appears to be now, that we got it all dialed in, that all your balances match in there, because that there's different cells that have to balance down. There's those check cell figures that should balance to zero, et cetera, that we all have a hard time figuring out and making sure they're balanced. We can work through all of that and get them right, so we don't have to be scrambling after the due date. Nate, you have anything for everybody? You good?
As always, I just want to express appreciation for your expertise and your time that you put into this. Years of expertise accumulated. And again, emphasize that these 387 reports, filling them out accurately, we recognize that this does take time, it does take effort, it does take communication expertise, but we do consider these investments, and not only just in your financial stability, which is huge. We want to make sure that you are able to fully focus your efforts appropriately on student achievement in the classroom, and having stable finances is critical to that. Our intention is to be here supporting you actively. We're trying to give you useful training. We're trying to give you useful tools. We're trying to advocate on your behalf. So again, we hope that you sense that intention in our daily actions with you. We're here to support you and help you be successful. And again, these 387 reports, just to reemphasize, we've touched on it multiple times, that state or the local sped funding is based directly on the dollars that you cite in your 387 reports. So those local sped dollars include those, everything you've spent above and beyond other sped funding, so that the picture that is presented of your actual spending is accurate, and that can be presented appropriately to the legislature and decisions made accordingly.
Okay, well, Katie, I don't see any other questions. And you want to close us out?
Yeah, I just again want to say thank you all for coming, and we apologize in advance for all the times that will pop up in your inboxes. Us again. So, but we are trying pretty intensively to do more proactive investments in some of these financial pieces, and hopefully you're seeing that too. We're available as resources should you have questions, comments, concerns. I am not the expert, but I have experts that I can get the information from. So please feel free to share with us. And I'll just say, I sent out the link to our Canvas. I've got our 2 trainings in there from this summer, but if you have other questions or things you think would make good trainings that you'd like extra help on, and some maybe your school leaders or whatever, if you have ideas for additional trainings or help we can provide, also please let me know that. I'm happy to share that, and hopefully this will make all of our work much easier at the end of this year, beginning of next year. And I think we're building some good foundational practices. So yes, reach out if you have questions, reach out if you need help. We're here to support, and we will talk to you all soon, I'm very sure. Thank you, everybody.